just to reemphasize here, while the industry is in a pretty deep slump for automotive chips, Qualcomm outperforming and scooping up market share. But the takeaway here is because Qualcomm is broadly diversified and their chips can appeal to a wide range of car models.
Welcome back, everybody, to another episode of Chip Stock Investor. Today, we're going to be talking about one of our favorite companies, Qualcomm. They recently had their Q2 fiscal year 2024 earnings release. You may recall that Qualcomm was a top pick for Chip Stock Investor in 2024, and we're very happy with our choice. Looking at Qualcomm compared to iShares Semi ETF and the S&P 500 in this chart, you can see that Qualcomm is outperforming both of those indices at 17% return year to date.
We did a pre-earnings update on Qualcomm just a couple of weeks ago. And actually, this chart with Qualcomm's outperformance is probably going to be a bit better once it's all said and done here this week, because Qualcomm had a very strong earnings report and the stock popped a bit higher as a result. So let's take a few minutes to recap that. Spoiler, the earnings were in line with our expectations, especially on the smartphone segment. But we want to take a couple extra moments to talk about automotive, because a few weeks ago we talked a little bit more about that Snapdragon X Elite platform for the upcoming Qualcomm-powered Windows laptops. So let's talk about the automotive segment, which is really just hitting it out of the park. Total home run this last quarter. Actually, maybe that's the wrong sports analogy for this time of year. They hit a very, very deep three-point shot in this last quarter on the automotive segment.
We haven't talked too much about the NBA playoffs, but we're sorry that LeBron is out. We're still in it. Mavs are still in it. So excited.
Go Mavs. Go Mavs. Okay, let's talk about the business.
Yeah, let's talk about Qualcomm. And Qualcomm fits into a number of categories on our semiconductor industry flowchart. They, of course, fit into that fabless chip design, and they have a number of patents that they license out, their intellectual property, and they have a small portion of the business that fits into the integrated device manufacturer portion of the semiconductor industry.
And maybe just a brief note on IDMs, integrated device manufacturers. That's when a company both designs and manufactures a specific type of chip. And in this case, for Qualcomm, it's a lot of radio frequency or RF devices used in mobile connectivity. Of course, obviously smartphones, but also tablets, laptops, wearable technology like earbuds and smartwatches and so on and so forth. Almost a year ago, we made some adjustments in our portfolio. In the IDM portion of our chip stock portfolio, we parted ways with our longtime holding in Skyworks Solutions and reallocated part of the proceeds to Qualcomm, among some other stocks. And we're glad that we made that move. Obviously, you can see Skyworks Solutions continuing to not really benefit from the next upturn in the semiconductor industry, specifically for mobile technology. Qualcomm very much benefiting from these new trends and taking some market share. Skyworks mentioned that they actually lost an RF front end customer last quarter, and who picked it up? Well, it was Qualcomm, picked up a sizable design win in a smartphone customer for radio frequency devices. So Qualcomm, very strong player in this IDM part of the market. And then very briefly, again, we shared this a couple weeks ago, but obviously smartphones are the bread and butter for Qualcomm. That part of the tech industry is stabilizing. It's not in all-out growth mode again. We're still looking at probably just flat to maybe low single-digit percentage increases in 2024 versus 2023 for global smartphone shipments. Tech researcher IDC showed this just a few weeks ago. You can see Apple losing some market share as of late, Samsung picking up pace again, the Chinese smartphone designers and manufacturers also ramping up. Qualcomm benefits from all of these companies, but again, this market is just stabilizing. Qualcomm is getting higher average selling prices for its chips, especially in 5G chips. So that segment is expected to grow this year. Qualcomm benefiting, though, overall from just a stabilization of the market at the expense of other companies in the space like Skyworks Solutions. So we do like Qualcomm's positioning in what has become a very mature mobile computing market.
Here's the chart from Qualcomm's second quarter results. You can see that revenue basically remained flat year over year, but the real story of these results is in profit margin expansion. You can see the earnings per share $2.06 and on an adjusted basis $2.44. 36% change in those earnings per share on a GAAP basis and 13% change on an adjusted basis. It was even 4 cents above the high end of their guidance. Now, as Nick mentioned, the smartphone market is not in growth mode right now. Profitability is where Qualcomm is focused. And that leads us to discussing the automotive segment for Qualcomm. Qualcomm's automotive has grown significantly, even while other companies' automotive segments have fallen drastically. Let's take a look at the numbers.
So this is the last quarter, 3 months ago, 598 million, a new record for the automotive segment in Qualcomm. This was basically for the quarter that ended in December 2023. And everybody started to report a big drop off in automotive revenue starting in that calendar year 2023 fourth quarter and expected to be in a significant decline through at least the first half of 2024. Qualcomm had said, in addition to hitting a new record automotive revenue in its last quarter, it actually said it was going to grow again in the first quarter of calendar year 2024 or Q2 fiscal 2024 for Qualcomm. But they had said to expect a sequential decline due to seasonality. Well, you can see that didn't transpire. They actually grew not only year over year in their automotive segment, but sequentially as well. 603 million in automotive revenue, a new record. This company is on track to drastically outpace its own estimates, its own goals for automotive revenue. This was a 35% year over year increase. And there's more good stuff coming in the spring quarter for calendar year 2024 or Q3 for Qualcomm.
Yes, in fact, Qualcomm boasts that they are growing faster than the addressable market, and they remain on track to achieve that greater than 4 billion of revenues in fiscal year 2026. Now, compare that to this chart we have on Mobileye. Mobileye's gross margin in the most recent quarter only 23%. The revenue was down 48% year over year, and their earnings per share had a significant dip down to negative 27 cents in the most recent quarter. And this has been an ongoing trend in the last couple of quarters with the decreases.
Now, Kasey, in Mobileye's defense, which, as many of you probably already know, is majority owned by Intel, as well as in the defense of a lot of other semiconductor companies that supply the automotive market, the reason for their decline is excess inventory at automotive suppliers. Some of that is due to the slowdown in electric vehicle sales. Some of it is just a bit of some excess inventory in advanced driver assist system components. That's the story at Mobileye. Qualcomm is thus not an apples to apples comparison to a lot of these automotive chip suppliers. Their Snapdragon digital chassis, which for the most part, not completely, but for the most part falls under that fabless chip design segment, is benefiting because it's broadly diversified across a lot of different components that are needed in the modern vehicle. There are various chips needed in auto connectivity. You can see on the right that includes everything from 4G and 5G, as well as in car connectivity like Bluetooth devices being able to hook up to the car, EV charging connectivity. If you control EV charging in some way informed from like your smartphone or from the in cabin display, There's the cockpit platform over there on the lower left. So things like navigation, cameras, displays, the ride platform, which is where Qualcomm files its advanced driver assist systems. And then this all falls under the umbrella of their car to cloud platform, where the car actually sends data to some data center somewhere. So again, not an apples to apples comparison. Mobileye in particular solely focused on just autonomous drive features, which would be a more accurate comp to the Snapdragon Ride platform. But the takeaway here is because Qualcomm is broadly diversified and their chips can appeal to a wide range of car models. It's not just high end car models that they're addressing, but also maybe more mass market cars. Regardless of the model, auto manufacturers are keenly interested in cramming this tech into their cars to make a sale, or at least to keep up with their peers so that they don't lose a sale because someone else has a cooler infotainment system than their mass market model. So Qualcomm benefiting from this trend. And you can see their design win pipeline increased 50%. The last time they updated this was September 2022. They said 30 billion was the design win pipeline. Now it's up to 45 billion. Snapdragon digital chassis is a big winner for Qualcomm and a big, nice addition to that smartphone bread and butter.
We'll highlight a few key comments from CFO Akash Palkawala from the earnings call. The first is talking about their divestiture of their non-arriver business related to the acquisition of the company Veoneer. Very happy with the acquisition, and that arriver team is continuing to work on the ADAS software stack, targeting vehicle launches in 2025. And then another comment that was made regarding their QCT revenues, they expect that to decline by mid-single digit percentages sequentially, and that is mostly due to seasonality and the absence of flagship smartphone launches in the quarter. But they do expect QCT IoT revenues to grow sequentially by low to mid-single digit percentages as they see a gradual recovery from the macro factors that have been impacting the industry, as we've discussed in previous videos. Ultimately, shifting back to that automotive segment, they expect that to grow by low double-digit percentages quarter over quarter. So significant gains in this segment for Qualcomm.
Yeah, in very rough dollar and cents terms, that means we're probably looking at something close to approaching 700 million in quarterly automotive revenue in Q3.
Not bad.
Yeah, not bad at all, indeed. Kasey, just moments ago, you had mentioned Qualcomm's old target that they provided a couple of years ago, 4 billion automotive revenue in fiscal year 2026. There's a lot of moving parts to this. It looks like Qualcomm is not just on track to meet that goal, but probably exceed that goal. They gave just a bit of information about what is driving that success in the automotive segment.
Yes, Nick Packwell mentioned that their design win pipeline is materializing into revenue. And he noted that about 1/3 of the automotive portion is driven by advanced driver assist systems. And ultimately, that comes down to Qualcomm having a very well diversified automotive segment. Tell me why this isn't diversification.
Yep. Let's maybe just go back to this slide again. It comes down to the fact that Qualcomm Automotive addresses all parts of the modern vehicle. And so when you have these little periods where maybe very, very high end chips are in a cyclical slump, but maybe the lower end market chips are doing just fine. Automotive is a new secular growth trend for the technology industry. And automakers are having to keep up with each other by stuffing more connectivity tech, infotainment tech, some incremental driver assist features in there. And they need to be able to do so affordably. And Qualcomm really just filling that need. So this is why diversification in this case, as you said, is not diversification. Qualcomm able to pivot its portfolio to whatever part of the auto market is growing the most in any given moment.
Part of our investment thesis for Qualcomm just a year and a half ago was that free cash flow ramping up, and that is affecting the balance sheet. At the end of Q1, just a quarter ago, there was 12.1 billion in cash and short-term investments, but 15.5 billion in debt. Now, compare that to the end of this most recent quarter. Now there's 13.9 billion in cash and short-term investments and still that 15.5 billion in debt, ramping up their cash on their balance sheet.
Yeah, and along the way, of course, we talked about a few weeks ago, Qualcomm increased its dividend last quarter, repurchasing lots of stock. So the share count continues to fall over time. Exactly what you like to see from a slower growth business where income, shareholder income, and stock repurchases are a main part of the thesis. Really good stuff happening at Qualcomm right now.
Let's talk about guidance for Q3. You can see that underlined in red there, the revenue 8.8 billion to 9.6 billion. That would imply a 4 to 14% year over year growth. And then on a non-GAAP basis for earnings per share, $2.15 to $2.35, which would imply a 15 to 26% year over year growth.
Yeah, again, this story all about profit margin expansion as Qualcomm emerges from pretty nasty mobile chip and consumer products downturn the last year and a half. This is exactly, again, what we want to see. Not the fastest growing business, but profit margin expansion. They are executing very well on this front.
You may be getting used to seeing our chart that we made here regarding the cycles of these segments: AI infrastructure, consumer such as PC, smartphone, and laptop, cloud and enterprise, and auto and industrial. Qualcomm plays mostly in that consumer and auto and industrial space, as we've discussed.
Yeah, that's right. And the consumer portion, again, just stable at the moment. Smartphone, which makes up the vast majority of Qualcomm's revenue at this point, not exactly in all out growth mode again, at least not yet. Maybe that will ramp up a bit more in 2025. We'll see. Again, check out our video from a few weeks ago about the Snapdragon X Elite for laptops and how that fits into Qualcomm's consumer portion of its portfolio. But again, just to reemphasize here, while the industry is in a pretty deep slump for automotive chips, Qualcomm outperforming and scooping up market share. Design win pipelines like get cited $45 billion figure, that's just a design in. It doesn't mean that's how much revenue they will realize in the coming 5 to 10 years from automotive, but it can be a good general indicator of where revenue is headed. And in the case of Qualcomm, they have an established track record of ramping up that revenue profitably. What was a drain on profitability the last few years because of research and development into these automotive chips, as they quickly scale up, fast growing segment is contributing to profitability for Qualcomm, bucking the market trend. Qualcomm remains one of our top picks for calendar year 2024 in the semiconductor space.
Right, that's a wrap on this video regarding Qualcomm's Q2 fiscal year 2024 earnings. Stay tuned. We still have On Semiconductor and Lattice Semiconductor reports to cover. We'll have those out this weekend, and both of those are definitely focused on the auto industry. So we're going to discuss what their reports mean and what their outlook is for the coming year. We'll have our show notes available for this video on our Ko-fi shop or over on our Discord channel. You can join our Discord channel by joining the membership here on YouTube or on Ko-fi. $5 a month gets you a lot of perks, so check it out. We'll see you all again soon at Chipstock Investor.